Look at this, guys. The number of companies that failed to make required payments on their debt totaled 153 for 2023, up from 85 the year before, an increase of 80%. It was the highest default rate outside of the pandemic spike in 2020 in 7 years. Well, seems like corporations and companies just don't really have that much money anymore, and corporate debt is soaring to an all-time high. And hey, man, it's going to be even higher in 2024. And it's not me saying this. S&P 500 is saying this. And check this out. U.S. stocks are dropping because the Feds are going to be seeing slower pace of rate cuts. Hold on a second. The reason why they couldn't make payments was because interest rates were super high. Kind of makes sense, right? When borrowing fees are crazy expensive, it's very difficult to pay some of this debt back because the interest is so incredibly high. But now the Feds are like, you know what? Yeah, sure, we're cutting rates, but let's do it at like a snail's pace. So many of these companies can't take it anymore. This is why you're seeing insane amounts of layoffs, but it's mostly layoffs on very good paying jobs like Google, Amazon, tech, finance, fintech, like these high-end jobs that pay you enough to actually afford you like a somewhat decent house in American cities. A lot of these jobs are being cut. And now you have a bunch of jobs in the $15 an hour bracket. Those are very numerous. But high paying jobs, well, good luck, especially if you're coming straight and fresh from college. And the real estate market is going to be taking a huge hit, guys. Because when you have a lot of this corporate debt filling up, a lot of these corporations, hedge funds, and companies, and also even their employees, they're not going to be buying real estate. And here's what's happening here. Banks are also reporting on pain from commercial real estate loans. This is a serious factor because a lot of these banks are pretty smart, and just now they're like, hold on a second, we kind of screwed up. We bought way too many of these office towers, and we also loaned out a bunch of money towards office buildings and developers who want to make offices, and we're kind of screwed. We're looking at about 430-ish banks that have insane amounts of commercial real estate loans, and that's very frightening. And let's show you guys how bad commercial real estate is. Generally speaking, like downtown is where most of these companies are headquartered. But if we look at this week's DC deal, another office building in Washington, DC sells for an insane steep discount. The latest deal comes in at less than a third of its 2017 sale price of $18.2 million. They sold it for $18 million. It's a building that looks like this. Such a good looking building in a pretty good spot. And if you look into it, 2017, I'm pretty sure $1 million in 2017 is worth so much more than $1 million in 2024. With all the money printing and inflation, $1 million back then could buy you a lot of things. Not to mention you sold it for 33% of the original price that you bought the building for back like half a decade ago. That's pretty bad. And this is going to be causing even more companies to fail because you have companies that can't pay a lot of this debt. The banks are freaking out because corporations aren't paying them. The banks are also freaking out because the rates are being cut super slowly. And then you have real estate deals just completely plummeting down to the core of the earth, with bank reports already showing that a lot of these commercial real estate landlords are so far behind payment. And banks are actually pretty lenient because they don't want these buildings, right? These buildings will only cause them more pain. What banks want is the money. They want their money back. And you have like Chicago office towers selling for $4 million. Like what? Like these buildings are humongous too. And this really gets us to the point of like residential real estate. It's not any better. Okay, many of these homes are sitting on the market for a very long time. Just look at the numbers. Even though rates have went down a little bit, but there's barely any people on the market to buy a crib. Many of these homes are on the market for a very long time. Not to mention, a lot of developers are still making crazy amounts of homes. And who are they selling to? The people who have high-paying jobs, which recently have been very, very scarce. And it's only going to get worse, guys. Thanks for watching, guys. Comment below. What do you think about the real estate market right now?